Marriott has performed above average over the last 5 years, up 110%. In the same time frame, the S&P 500 has only gone up about 100%. Marriott pays a slightly smaller dividend than the S&P 500, but it's almost the same, about 0.25% less. It's also performed pretty well, actually above average since 2014, but that's about 5x'd. So the S&P 500 has done about half as well as that. So this is a good performing stock. I'm assuming most of you know what Marriott is. Basically hotels, right? Hotels and lodging. It's not like, the craziest stock. When you think of stocks that just moon, like Nvidia or whatever, this isn't going to be one of those, clearly, right? Marriott isn't going to invent some AI chip that's going to cause it to shoot up in price. But however, what you see here is a stock that has performed above average, is one of the largest companies in the United States with a $73 billion market cap in a good area where you can diversify into. I'm assuming most people watching this video, I would assume most of you have an interest in Marriott stock. However, probably most of your portfolios are not just full of different hotel stocks, right? Because there's not a whole lot of them, and not a whole lot of them that are safe, stable, and huge. So this is an important stock to look at, right? And I think for that diversification, it is important, right? Because I'm not sure there's a whole bunch of people just clamoring to get Marriott stocks specifically. But like I said, that diversification to an industry that doesn't have, 10,000 different stocks to choose from, right? Because I love tech. I love semiconductors. I majored in a STEM. I understand that sort of field, right? But there's literally 50 different semiconductor stocks I could probably point you to that are good. How many hotel lodging brand stocks can you point me to that are large, stable, relatively large? There's just not that many. So that's what I think the biggest advantage of Marriott is. But let's take a little bit deeper look into some things. The forward PE, not exactly ideal. However, most of that is just because they had a huge beat in Q4, which I don't necessarily know what that's from. I'm not 100% an expert on this stock. I don't know all the research on it. But if you look and compare, generally the expectations is this stock is growing, right? Every quarter their expectations for next year is higher. So sometimes for PE, PE and forward PE can be deceptive, and you do have to look a little bit deeper under the surface. Let's take a little bit of a look at annual. Yep, so they've actually been growing. At least I'm assuming it was 2021 was COVID, so let's mostly ignore that. But we see revenue, generally growth, or this is earnings per share. It's really hard to, you got to basically discount that. You're slightly down this year, but revenue is up nonetheless. That's generally what you're looking for in this stock, right? Just some form of stability and growth, clearly. Yeah, like I said, hotel stock, they own a bajillion different brands. You can read them all if you want. I'm not going to. Right, I think I dove into the meat and potatoes of it, which is just diversification to a stock that has performed well. I didn't quite mention the PE. It seems high, but actually this is slightly below S&P 500 average right now. The S&P 500 average is right around 27. This is at 26, so I would hate to call it a value stock, right? I think it'll likely perform more akin to a good value stock, than certainly like a tech stock, growth tech stock, right? But I'm not going to attribute value to a company that is valued almost exactly at S&P 500, because generally the term value implies that it's cheap compared to the S&P 500, and it's also clearly not a dividend stock, right? With, what is that yield? 1% yield, right? That's not bad at all. That's not like you're not throwing this in a dividend portfolio. So this is just, I view it as good diversification to a good stock, right? Generally. So Schwab thinks it's going to perform fairly poor, 72 percentile. So they think it's going to perform worse than 72% of stocks that they rate over the next year. I can't predict the future, so I don't give a rating on that sort of thing. However, I think that's probably a tad bit harsh, but I'm sure they have that opinion for a reason. And D doesn't sound great, but they're probably thinking about flat, right? Because most stocks do go up. So even if you're looking at a 50 percentile ranking, that's probably not horrible, as the average stock will grow in any given year. But we get 2-star there. We get wide economic melt. I agree. Right, a lot of things go into it. One brand, they have all different, and if they have these brands for a reason, right? For all the different sorts of areas they want to hit, they're large, right? 78 billion. They're probably one of the largest players in the space, certainly in the United States, right? So that is going to demand. I do hate the 0-3-10 sort of scaling they have with this thing, but I would probably lean towards wide than narrow, at least in their specific field, right? 3 stars, buy, long, hold, decent ESG score, or more like middling, but whatever you think of that. Let's take a little peek at how PE has been. Oops, I don't know if you saw that, but I misclicked. Yeah, it's gotten slightly more expensive PE over the last year and a half or so, but everything has been, right? This is almost probably, I would assume, almost exactly as much as the S&P 500's climbed over that time frame. I would assume. I'm not making that for certain, but I'm pretty sure. So majority now say buy of analysts. Last 2 months it was hold. Last 3 months it was hold. Majority, or at least half, but now 13 of the 25 are saying buy or strong buy. So there you go. Price target slightly above. I don't put too much stock into that sort of thing. I think analysts are fine. They go into the broader picture you have of the stock, but they aren't the end-all be-all. Anyways, we've made it to this point in the video. I could reiterate some of the points I made, but I think I've said them all enough, so I'm just going to end it here. If you made it this far and enjoyed the video, I'd appreciate if you left a like or subscribed. It really does help out the channel. My channel is new and growing, and I appreciate all the support you've given me. But anyways, I do a lot of similar content on this channel, all sorts of stocks, so check it out if you liked it. But anyways, catch all you guys in the next video. See you later.